Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And today we're going to be using some of the tools that are available on the Thinkorswim desktop platform for the tracking of relative strength among the different markets, the different indices, the different sectors. It's an important thing for a lot of traders and investors who like to keep their eye on which markets, which corners of the marketplace seem to be strongest or which seem to be weakest. So should be a really good discussion. A lot of tools to cover today. As we dive into that, let me first of all say hello to everybody who's already chatting in out there in YouTube. I always like to watch the chats before I launch these webcasts. Great to see all the familiar names. Great to see some new ones. But hello there, Parvati and Scott, Will, Life in the Fast Lane, Eva, Rojo, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, well, enjoy those recordings. It's a great way to watch these webcasts. But if you'd like to be here in the live stream audience, this is a Wednesday webcast series when we kick things off promptly at 2 Eastern. Now, I also want to let my let my audience know that my very good friend Barb Armstrong is already hanging out in the chats here with us. She's keeping an eye on any questions that come in that I can't get to. She's there to help me pick up my slack, so definitely appreciate that, Barb. Barb and I would also like to issue an invitation to everybody listening to follow your favorite Schwab presenters on social media. You can find Barb and me on X. You can find Barb there at Barb Armstrong CS. You can find me on X at Cameron May CS. You can also now find me on LinkedIn. So if you reply to one of my posts on social media, I just try to reply right back to you. It really is the way to connect with me in between the live streams. But let's get into this discussion. And as we do, of course, any approach to trading or investing carries risk. So bear these important disclosures in mind. All corporate or issuer names and market data shown are for illustrative purposes only and are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so let's set the agenda for today's discussion. I think that just about every investor or trader out there has an interest in what's hot and what's not, which areas of the marketplace are doing well and which are not doing so well, and how can we quickly locate those using the tools available on Thinkorswim. So I'm going to be introducing us to a series of tools today, probably 5 or 6 big tools, little modifications that can be made to each of those. So follow along. I'll try to go at a pace that everybody can follow. Don't put the pressure on yourself, though, to try to remember every single click that I make, because these webcasts are recorded. If you need to go back and revisit something, you didn't quite catch the exact path that I used to get to where I was, you can go to the archives on the Trader Talks channel. All right, but we're going to learn these tools. We're going to apply them to current market conditions. I think that might be the best way to really acquaint ourselves with something that's new that we haven't seen before on Thinkorswim. So let's go to the platform. And I'm going to start off on the paper money platform, although we will be visiting a demonstration version of the live platform toward the end of today's discussion. But I kind of cheated here, and I'm already viewing a chart of the S&P 500. We're having a nice day for the bulls today, moving back up to within 1% of all-time highs. So we'll see where that heads from here, but not everyone knows how to find the major indices, or maybe they don't know the tools that might support the view of the major indices. So here's how we find those. If we know the symbol, of course, if we're starting off with just a blank chart on Thinkorswim, we can type in the symbol. Now, not everybody knows those symbols. So Thinkorswim has a handy little tool here, handy little feature. If we click on the down arrow next to the symbol box, there's a tab that says indices, and it has a lot of those major market indices here, starting here with the NASDAQ composite right up there at the top. You have the Dow Jones Industrial Average next. And then as a quick navigational tip, if we just zip down to the bottom, we'll find the S&P 500 right in the middle of the menu there. So we could find things just in that way. So how about let's load up, how about the NASDAQ composite? Let's go back up to the top of our menu. We're going to go to the composite, and let's look at this through the lens of another tool that's commonly used. In my experience, is possibly the most commonly used tool by chart users to look at indices, to look at maybe sectors or even individual securities. And it's known as a simple moving average, as a trend indicator, potential support and resistance indicator. But before we apply that tool, I just want to say, as we're looking here at the NASDAQ composite, what some investors, what some traders might do is just perform their own quick visual evaluation of what's happening with the index that they've charted. And one common approach is to look at the highs and the lows. So with indices, with sectors, with stocks, rather than running straight up or straight down over a period of time, they'll tend to move in little stair-stepping cycles, running up and pulling back, running up and pulling back. A typical cycle might be 3 to 6 weeks, something like that, although they can certainly be shorter or longer. But this is just what we call highs and lows analysis. And that might lead the investor or the trader just to conclude what the current direction of the index is. And actually, a lot of these major indices, the highs have been kind of going sideways. The lows have been kind of going sideways. We've been seeing a consolidation now. And if we look at, if you look at the NASDAQ, boy, if we go all the way back to September, there has not been much of a net advance, not been much of a net retracement in that time frame. Now, Bob says, hi, Cameron. Hi, Barb. Did Cameron already show a summary of what he's going to cover today? I don't show it, I verbalize it. So today we're talking about tools that that might help a trader or investor track markets and sectors on Thinkorswim. All right. But in any case, doing a quick manual overview of trends on one of these major indices is one way that a trader or an investor might track to see, is this index strong or weak? Is it strengthening or weakening? Another way, though, is to apply a technical indicator. That's what we're going to do now. I'm going to go up to the little flask icon, which gives us access to all of those technical tools that so many of our users of Thinkorswim enjoy using. But I'm going to click on that flask. That's our studies icon. And let's add a simple moving average. So I'm just going to type in SIM for simple moving average. That'll narrow down the list of potential studies to just those containing the word simple in them. And let's add that to our chart. And by default on Thinkorswim, this is going to be looking at trends over a very short time frame, just 9 days. Now that might be fine if we're trading rather aggressively in short spurts. For other traders, or maybe even leaning toward investor categories, they might be more interested in getting a longer term view of trend, a longer term view of price floors and price ceilings on our index. So let's make one modification to the default here. I'm going to come over to the little gear icon, and let's change the length of this indicator from just 9 days on this daily chart. How about we look at 50 days? So let's click OK and click Apply and click OK again. This is kind of interesting as we look at the NASDAQ composite. If we're not familiar with this indicator, I'll just summarize it for you. If we look up here, there's a number indicating the value of this indicator right now, 23,250. That specifically what that represents is over the last 50 days, the average closing value of the NASDAQ composite has been 23,250. Now, for some technicians, for some chart users, they might look to see, is the index above average or below that changing average right now? And at the moment, it looks like levels on the NASDAQ have fallen below average, or at least the average from the last 50 days. And sometimes that might be an obstacle to an advance, is sometimes referred to as a price ceiling or resistance level. But in any case, this indicator can be used as potential trend identification or price floors and price ceilings. So when one is trying to keep an eye on the comparative strength or weakness of different indices, that may be helpful. Certainly not a guarantee of what the future holds, but that's a quick tool that I wanted to introduce. Now, this is just looking at a single index at a time. And there are times when traders or investors might want to see whether the S&P is stronger than the NASDAQ, or is the NASDAQ stronger than the Dow? Where does the Russell fit in? So let's do a comparison among a couple of different indices. So I'm going to take off this simple moving average. Let's just click little X here. And I'm going to switch this for the comparison tool. Now, how many of you have used the comparison tool before? There can be, I do have a little tip for you, even if you've used it before, this might be helpful. But let's choose the comparison tool. Let's add that to our price chart. And by default, what this is going to do is it's going to compare whatever we have charted. So this is the NASDAQ composite, $COMP that we just found through that drop-down menu. But by default, this is going to compare our charted symbol to the S&P 500. That may be what we want, may not be what we want, but the one modification that I would suggest straight out of the gate is to come over here to this little gear icon again, and we're going to uncheck the box here for left axis. Let me show you the impact this is going to have. If I don't make that modification, if I just click apply, what we're now seeing is the composite and its relative levels, the NASDAQ over here in the left axis, and we see the S&P over here on the right axis, and they'll tend to kind of blend one into the other. Now, what I might prefer to do is to disable that left axis and just see, well, how have these two done in percentage terms over the last 12 months? If I change my time frame, I could look over the last 6 months or whatever. So let's come back up here. And just like I was proposing, let's click on the little gear icon and uncheck the left axis. So it's not going to be charting these sort of independently, but it's going to benchmark them. It's going to start them both at the same starting point. Let me show you what this is going to do. Let me click OK and click apply. And you see what's happened here? Now both of these are starting February 25th, and they're on the same scale, which is a percentage increase or decrease scale. So we can see the candles now represent, that's still our NASDAQ composite, and the purple line, as indicated right here, is our comparison line, the S&P 500. And we can just do a quick visual assessment. Looks like the NASDAQ got off to a weaker start over the last 12 months. It started to advance ahead of the S&P, but both have been consolidating. They've kind of been pinching toward each other. Now, looking at a candlestick chart and a line chart at the same time can make things a little bit fuzzier for some traders. They have a preference to simplify the view of the NASDAQ so that it kind of matches the visual appearance of the S&P. So we can, if we like, change the style here. Let me come up here, switch our chart type from a candle chart to maybe a line chart. And that might be a little bit easier for a trader or an investor to do kind of a meaningful comparison of the relative performance of those two. But that's kind of nice. We can now see, looks like the NASDAQ is up here about 22% up for the trailing 12 months. The S&P is up about 16.64%. And we can see when when these two indices tend to work sort of in step with one another and when there can be departures between the two. Now, here's another tool that I want to introduce for gauging the relative strength, that's the key term here, of one index versus another. And it's known as the relative strength tool. First thing I'm going to do here, though, let's remove our comparison line. Just going to come up to our studies, click the little X, and now we're going to switch this. So this is our third tool. We've looked at a simple moving average. We've looked at the comparison tool, and now let's look at the relative strength. So I'm going to choose relative strength from our menu, add that to our chart, and click apply. And what this leaves us with is this indicator down below, but there is something I need to change. You remember when I disabled that left axis, it put our price chart on a percentage chart. And even if we take that tool off, which we've just done, we took off the comparison tool, it left us with the percentages here. So how about we switch things up just a little bit again? First of all, how about we put our candle chart back on? And how about we, let's change the price scale. Let's go over here to our chart settings and change the price axis away from being a percentage. If we uncheck this, it's no longer going to be a percentage. It's just going to be the normal price levels that we're used to seeing. But now let's acquaint ourselves with this relative strength tool. So what we're doing here, instead of having two line charts and we're just sort of observing the behaviors between those, we're still looking at just the NASDAQ composite, and we're using a study down here that indicates whether the NASDAQ has been relatively stronger or relatively weaker than the S&P 500. So as we look at the relative strength tool, I'll explain these two lines to you. We have a red line and we have a blue line. Basically, this red line is just showing us how the NASDAQ has done for the time frame of our chart compared to the S&P 500. So a red line is kind of, that's the S&P 500, okay? And if our blue line is above that, what that means is that since the start of this 12-month chart, the NASDAQ has outperformed the S&P. Now, it doesn't mean it's outperformed it every single day. There are times when it's really outperforming, other times when it's actually been underperforming, but net still ahead for the year. Now, the blue line is known as the relative strength line itself. And what that does is it just shows us at any given time, is the NASDAQ outperforming or is maybe the S&P having a better run? So I can look at the blue line right now and look back to the start of the year and say, well, blue's above the red. That means that for the year, NASDAQ's had a better year, but there are definitely times during the year when the NASDAQ has had a stronger run, relatively stronger, and there are times during the year when it's been relatively weaker. So this consolidation that we've seen for the NASDAQ going all the way back now to September we saw earlier, the NASDAQ has been underperforming the S&P really beginning in November. You can see that shift. And that can be important for an investor who's trying to make decisions, maybe for how they're going to allocate their portfolio, for a trader who might be looking for, are stocks in the S&P stronger right now, or a NASDAQ stock stronger right now? So this is a nifty little tool that might provide some of that sort of insight, and it's a customizable tool. So we've been comparing all along. Okay, Rich says, that's a perfect question. Yep, Rich just asked this question. Can a relative strength index be used for individual stocks also, or just the indices? It can absolutely be used for individual stocks. So for example, I could bring up Apple here, and now we're seeing, well, has Apple, and you can ignore this, that's just information from another webcast that I teach, but has Apple been relatively stronger or weaker than the S&P? Actually, overall, it's lagging a little bit under the S&P's performance for the year, although it's had times when it's been stronger, times when it's been weaker. Now, we can also look at other indices. I could maybe load up the Dow and look at its performance relative to the S&P 500, or we can even change. So what we've been doing is sort of playing with the top symbol. Well, what about the comparison symbol? By default, it's the S&P 500. Let's change that one. We can do that by clicking on the Edit Studies icon and going to this Customize Gear, and we can just change that bottom symbol. So for example, if I want to look at the Dow compared to the NASDAQ, let's type in $COMP, or we could use the drop-down menu. Click OK, click Apply, and now we're looking at, has the Dow had a relatively stronger or weaker 12 months than the NASDAQ? I think unsurprisingly, even though the Dow has been going up, it's been going up less rapidly than the NASDAQ, so our relative strength would indicate it's not as strong. Okay. Neela just asked a good question. What's the difference between this and RSI? I will just say there is a significant difference. They sound very similar. There's the relative strength index, which is RSI. Then there's a relative strength indicator, which is just plain old relative strength. You can see right here it says relative strength. It doesn't say RSI or relative strength index. They are different. I'll just leave it at that. For me to do a more like point by point comparison, I'd have to get into the specific construction of the RSI and then break down the differences between the two. It'll be too far off topic. But just because they have a similar name doesn't mean that they're the same indicator as the bottom line that I'll leave you with. But it's a good question. It comes up pretty frequently when talking about the two, when talking about either one of the two. All right, so we've learned a series of tools that can be applied to an individual index. We've learned a series of tools that can allow us to compare and contrast among the different indices. Let's look at now the sectors that comprise so many of these indices. Thank you for the summary there, Eva. Definitely appreciate that. That's just helping out with Neela's question. But I'm going to come up here again and let's take off this relative strength for, shall I leave it on? Actually, let's leave it on for this portion of the discussion. But what I want to do is go to the individual sectors. So here's a quick tip for finding the 11 sectors that make up the S&P 500. Thinkorswim actually manages and publishes a series of watch lists for tracking a number of different things. And among those is a watch list of the different sectors. So if I go to my watch list, right now the watch list is showing it's showing the S&P 500 companies. I'm going to click on that watch list heading and go to the public watch list in alphabetical order to S&P sector indices. So that's kind of a longer term for saying these are the S&P sectors. So as we look in that left column, let me expand this out a little bit more so you can see there are 11 mystery symbols here. It looks like they're all S&P 500, but then they have this pound or hashtag 10, 15, 20, 25. These are the different sectors. If I click on those symbols, it actually, if we've linked our watch list to the chart, and you can do that just by selecting the same number here and here, that links these two functions together. Well, if I click on one, it loads that up on our chart. If I click on the next one, it loads the next one up, but we don't see exactly what's being charted. I see $SP 500, £15. What in the world is that? Well, right here is actually the name of that sector, but there's not enough space to fit it all in there. So we can make more space by just hiding this left column. There it is. So this is the materials sector. Okay, that's good to know. What was the first one? Click on that first one, hide that left column. That's the energy sector. So that's one way that we can see what these symbols mean. They are the symbols for the different sectors of the S&P 500. Here's another way that I might suggest. It's a little bit faster to see that. Let's just put in a column that tells us what these sectors are. So I'm going to click on the little gear icon. Let's customize our columns. I'm going to take market cap and last out. We don't actually need those for looking at the different sectors. And I'm going to replace those with just a description of the thing being charted. So let's add that description. So we're going to see the symbol and we're going to see the description of that symbol. And then click OK. There we go. Now we can see what those sectors are: energy, materials, industrials, discretionary, staples, and so on. So I want to have a look at a couple of these. How about we just start here with energy? And shall we close this up just a little bit? That's okay. I'll leave that right there. But I want to look at the energy sector and discuss that within the context of this relative strength tool that we've just learned. Now, before we were comparing one major market index to another one to see which one might be stronger, which one might be weaker, which one might be emerging strength, which might be surrendering recent strength. What's been going on with the S&P 500, what's been going on with the energy sector this year? I got a question for you. We all know that the bulls have had a pretty darn good year the last 12 months. Which sectors have led that charge? There's a good question. And are those sectors still leading the charge? There's another good question. How do we know that? So if you want to chat in, which sectors would you say have led the charge for the most part over the last 12 months that have contributed to this strong advance of the S&P 500? Well, I'll tell you, it wasn't energy until quite recently. Let's look at our relative strength tool here. And what you'll notice is energy, going back here to April, energy was actually on the rise. It was okay. The stocks in this sector were actually doing all right. Moving left to right, it would look like they were having at least a decent year. But what was our relative strength line doing during that time? It was going down. Yeah, Veer says technology largely contributed to the advance of the S&P 500. There were certainly a few other sectors that contributed as well. There were some that were hardly participating at all. So that's interesting. But when those facts change, it may influence some traders, some investors to change the way that they manage their self-directed portfolio. And one thing that might be interesting to some, I'm not saying this is actionable, everybody should be acting on this, but it's interesting that here was the energy sector just sort of tootling along, not even doing as well as the rest of the S&P 500. But what a user of the relative strength tool might note is that the trend changed on that indicator right back here. We broke through a downward trend line, looks like late 2025, moving into 2026. And look what energy has done since then. There's been a real acceleration of that sector. This is now one of the leading sectors just over the last few months. Now, is that going to continue? We don't know that. But for some, if they're using these tools to track the sectors, there may be an interesting shift in the way that cash is being allocated among the sectors that kind of lines up fairly nicely with traditional economic modeling. Who's been following the shifting of sector performance? And what's been interesting about that? Well, let's do a comparison. We can see what energy has been doing, was lagging behind everybody else, and then started to show signs of life just as we moved into 2026, and then that really took off. At the same time, what was going on with technology, which had been leading the charge. You can see technology outperforming the S&P 500, really contributing to its net performance for the year. But back around the same time, maybe a little bit earlier, there was a softening of that trend. So that looks like that was maybe in the third-ish week of November. We start to see technology establishing a new pattern, underperforming. We're starting to see a decline against the other elements of the S&P 500. Could that be a rotation of cash away from the more speculative market corners of the markets and maybe more toward defensive positioning? Yeah, when investment, here's some basic economic theory, economic rotation theory, okay? When investors and traders are feeling really confident, they'll sometimes express that by going more into the more speculative, more volatile corners of the marketplace, such as traditionally like technology. When they're feeling a little bit less confident about the economy, about the markets, about the job situation, whatever, maybe they start to reposition and take their speculative position cash and assign it more to the, let's throw safer areas in the air quotes, because if the markets go down, it can certainly drag everybody down with them. But according to traditional economic models or economic cycle models, when investors and traders become a little bit more skittish about their outlook, they might pull out of these more speculative sectors and move more toward what we call defensive sectors. We call them defensive because they're the sectors that might be better at defending themselves against a weak economic situation. And it might be because of the type of companies that those sectors are comprised of. So for example, those defensive sectors commonly are described as being the energy sector, the utility sector, the staples sector, the sorts of stocks and the sorts of products that regardless of economic situation we just have to have them. We got to keep the lights on. Got to keep buying toilet paper. If we cut ourselves, we got to go get it stitched up. You know, those kinds of things. So Vera says, you've heard of the shift, but not the details. Thanks for these insights. Well, it's certainly my pleasure. And of course, just because the tool makes an observation doesn't mean that we've absolutely spotted exactly what's happening and it's going to follow those economic models to perfection, right? We don't know that. But it might be still interesting using this relative strength tool, using the S&P 500 sector indices watch list to see, all right, looks like there's some sort of a net outflow relative to the S&P 500 from the technology sector, and where's it going maybe? Could it be energy? Let's take a look at staples. Hey, what do you know? That one, we had a weakening that really started to strengthen maybe right there in that first couple of weeks of December. When a technician sees a broken trend line, a downward sloping trend line that's broken, and we start to see strength on this relative strength index, it might be a sign, or relative strength indicator, might be a sign that there's new enthusiasm coming to whatever it is we're charting up here. Could be a stock, could also be an index, could be a sector. So staples, look at that, just taking off. Energy, staples, what was the other one I said? Utilities. Let's have a look at utilities. So here's utilities. Lamont says, is the VIX a decent indicator for the shift you're talking about? No, it's Lamont, good question. VIX is just more a gauge of general volatility. It's not specific, you know, it's not a comparison necessarily. Yeah. Okay, so what's been going on with utilities? Well, utilities actually haven't had a bad year. If you look at the absolute numbers, we went from a level of about 380-ish up to maybe 450-ish between April and the second week of February. So net going up, just not as strong as other areas of the marketplace. But what's happened quite recently here for utilities, let's draw in that descending area of resistance on our relative strength. Looks like just over the last couple of weeks, we might be seeing some breakout behavior for utilities. So energy has kind of blasted off. Staples have kind of blasted off. Is it time for utilities day in the sun? Maybe. We'll see. But I think you can see the potential power of these tools that I'm introducing. Now, obviously, I just have to say it over and over again. We don't know exactly what's coming around the corner. But these are the tools that might allow us to keep an eye on what has been developing. So we've looked at the broad markets, we've looked at the individual sectors. Now, how do we connect that to individual stocks within the different sectors? And there are a couple of tools on Thinkorswim that I wanted to introduce today. Some of you are familiar with these. But the first one is to go to our MarketWatch Visualize tab and look at what's called the heat map. So let's switch this. Right now I'm looking at the index watch. Let's go to the heat map and acquaint ourselves with that. So what is the heat map? Well, we can select an index over here in the left column, and this is going to take the stocks of that index and organize them into sectors. And we can see the sectors. There are these little faint, see where it says information technology right there where your eyes are kind of flashing back and forth because I keep flashing back and forth. But it says information technology. That's the sector. These are the stocks in that sector. And then there is a slightly thicker white line drawn around the stocks of this sector. So here's information technology. We can see here are the financials with a slightly thicker line drawn around those. So these are the financial stocks. These are the information technology stocks. Over here are consumer discretionary. Healthcare is right next to those. A couple of other things that we need to know about this tool is the size of the box for a symbol tells us the relative size of the company. So NVIDIA, huge company, big box. Micron, a little bit smaller company. It gets a smaller box. If we go down to Qualcomm, smaller still. So the size of the box is relative to the size of the company. And then the color of the box is telling us how that company is performing today. So for example, one that really stands out to me right in the middle of the screen in the communication services area is Netflix. So there's communication services. I can see that it fits within its little framework. And Netflix is green. If I point at that, I can see it's up 6.27% today. So seeing some real strength in Netflix today. I can also see that down here in Western Digital up 7%. I can see Seagate Technology up 6.32%. But this is where we can connect, like here's little old utilities way over here, and the comparatively small companies that make up utilities. If I wanted to find the company within that sector that seems to be the strongest for the day, I could just focus on that, like Vistra Corporation in that utility sector. Now this tool, great little tool there, but one other way to see how these different companies are performing is using the Index Watch tool right up here in the upper left. So if I switch this to Index Watch, this is still a comparative performance up or down of the 100 companies making up the S&P 500. They're just not grouped into sectors anymore. But it is nice. I can just look at, like, let's say the tallest green bar, there's Netflix. That's the company in the S&P. In this case, it's actually the S&P 100 that I've selected here. We can change that if we want to right up there. But Netflix, strongest S&P 100 company. It looks like Lowe's is having the worst day of the S&P 100. But the final thing that I wanted to show you today in this discussion of tracking market strength, tracking sector strength, tracking individual companies within strengthening or weakening sectors is the scan feature. And for this, we're going to flash over to the demonstration live account. Now, this is just a fake live account, but I'm going to be using a feature here that's not available on Paper Money. So if you're following along at home and you say, Cameron, I can't do that, it's because we have to do this on the live platform. But I want to run a scan. And let's say that we've identified a sector of interest. And let's just say for today's discussion, our sector of interest is utilities. Well, how do we find the companies within that sector? And how can we maybe sort those according to whatever is important to the trader or to the investor? That's what the scan might be able to do. So we go to scan, we're using a stock hacker, and the first thing I'm going to do is not scan in all stocks, but I'm going to direct my scan specifically. Now this says by industry, but what you'll notice here is these are the sectors. Let's go to the utilities sector and just look through all of them. Select all utilities. So we're looking only through the companies comprising the utilities sector. And then the trader or the investor can just put in whatever is important to them. Let's say we're looking for, as an example, at least small cap or bigger companies. Let's say a $2 billion company. If we choose market cap, that's the size of the company. 2,000 million, market cap is described in millions of dollars. 2,000 million is a $2 billion company. Let's say we're also looking for companies paying a dividend yield of maybe 2% minimum. And let's put in one more requirement here. How about we look for companies with a current market price of at least $50 as our minimum. Now, the one final thing that I wanted to show you is there are plenty of small cap or larger utilities companies with a 2% yield that are priced at $50 or higher. If I click scan, we'll see there's 45 of those companies in that sector. What if we also want to find those companies? Not everybody looks for this, but let's say we're looking for those companies that are also just strong in their stock price performance. Maybe looking for companies that are trading pretty close to their yearly highs. Well, that's what we call a study filter. So let's add another filter here. We've run out of the default filters. We've used all three. So let's add another one. And this one's going to be a study filter. And for this one, I said, let's look for, among these companies, let's look for those where their price is pretty close to their annual highs. Well, that's a price performance. So let's choose price performance near highs. And then finally, we just need to specify how close to the high. Let's say we want price to be within, let's say 5% of the 252 day. That's just 252 days is a typical trading year. 252 day high. Great. Let's run scan. Let's see how many of the 45 companies match or meet that criteria. And it looks like it's going to be a little nitpicky. That's okay. I'm not going to worry about that. Sometimes when I run a scan while I'm also running a webcast, it can kind of put a drag on the bandwidth of the platform. In any case, I'll just close that out for now, not require that. But what that would have done for us is just find among these 45 companies which ones are closest to the top. I'll tell you, NextEra Energy is one of those. So if we were to look at our chart, let's go to our chart and just throw NextEra on here. Is that one of those utility companies that seems to be participating in this recent increase in relative strength, possibly getting cash from other corners of the more speculative marketplace? Could be. But guys, we've covered a lot. I realize that when I do these demonstration videos, there are a lot of clicks, there are a lot of tools that are demonstrated. The nice thing is these webcasts are recorded. So if you need to go back and rewatch any portion of that, if you were intrigued by a tool but you didn't quite catch all of the navigation, just go back and watch that. So let me make a couple of suggestions for you before I send you off into the rest of your day. Number one is to make sure that if you're new to this channel, make sure you subscribe to the channel. You can go down below the video right now, click on the subscribe button. It only takes a second. It doesn't cost anything to do that. But our Trader Talks channel on YouTube is where you can join these live streams. You can also find the playlists for previous webcasts. So like this one should be posted pretty quickly, unless there's some sort of a technical glitch. Every once in a while that happens. It can delay it a little bit. But it's scheduled to be added to our playlist. So you can go to playlists. This webcast series is called Getting Started with Thinkorswim, and it happens to be the one that's all the way down at the bottom of all of our different playlists. So there it is, Getting Started with Thinkorswim. We just click on View Full Playlist, and you'll find that right up here at the top pretty soon. A lot of you are watching it as a recording right now. It's after the fact, right? Anyway, another thing that Barb and I would suggest you do is to follow us on social media. I get the question very commonly, Cameron, how do I connect with you in between these webcasts? Well, you do that through social media on X or on LinkedIn. So you can find Barb and me on X. You can follow Barb at Barb Armstrong CS. You can follow me, here's my handle, at Cameron May CS. Make sure with these handles you spell them absolutely correctly, because there can be very similar handles. Sometimes there's some scammy people out there trying to pretend to be us, but that's mine, at Cameron May CS. And if you reply to one of my posts here, I just try to reply right back to you. Very active on social media. You can also follow me now on LinkedIn. Just go to linkedin.com/in and then throw on /Cameron May CS. That'll take you right to my profile. And you can give me a follow here. I've only been on LinkedIn for a few months, but I'm doing the same thing. If you reply to one of my posts here, I try to reply right back to you. Okay, everybody, I hope this was a interesting discussion for you. I know it can be a big deal for traders who are trying to keep their eye on where does strength lie, at least currently, in different areas of the marketplace, and how might Thinkorswim support my efforts to try to find that. So we've learned those tools today. Didn't get to all of them. There are lots of other tools we could have discussed. If you want to leave a comment down below, let me know what's your favorite strength or market, what's your favorite sector or market strength tool. Give me a comment. Anyway, everybody, thanks for giving me your time today. Barb, thanks for helping out in chat. That's always appreciated. Thanks everybody for all the thumbs up. I can see 123 people watching the live stream even right now. And we've already had 48. That's almost half have clicked the like button. Thank you for doing that. Your presenter always receives that as it's kind of like applause. So that's appreciated, but it also gives my videos a nice little boost in the YouTube algorithm It helps more people find these discussions, learn things like the tools that are available on Thinkorswim for tracking market and sector strength. So everybody, thanks for doing that. I'm going to let you go. I'll look for you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.